Recording in progress.
The Eurasian so make your speech not tricky, but not yeah, yeah.
Hello. Sorry, let me off my thing. Okay, if you can hear me, can you type yes in the chat box? Okay. Thank you, Leong Fong. Oh, there's some echo. Give me a second. On, Okay. So sorry. I'm trying to use my own handphone to record. To enter so that I can know what's going on. Okay, so anyway, let me share the slides first. Give me a second. Okay. Okay, thank you everyone. Very excited to have you here today for this webinar, Building Wealth with Quality Stocks. Okay, before I get started, right, so thank you once again, right, for joining us. So feel free to have your dinner and enjoy this session, all right? To kick things off, okay, let me ask your one question, all right? Just to kick things off, right? Did you join this webinar to learn more about quality investing and how to spot quality stocks? Or did you join to find out more about the IBF accredited or the SkillsFuture credit deductible course that I've talked about, okay, on how to invest in the era of disruption? If it's the quality investing, can you type 1 in the chat box? And if it's the workshop, right, can you type 2? Okay, if you come for both of them, right, can you type 3? Yeah, just share your thoughts in the chat box. Okay, I just give you all 1 minute. Okay, well, sorry, once again, right, I just want to share that I'm still recovering from a blocked nose and sore throat. So along the way, right, please bear with me as I take sips of water, lah, okay? Okay, thank you everyone for your responses. Oh, didn't know there's a 2. Okay, thank you, Valerie. Yeah, okay, so 1 and 2, 1 and 2, 1 and 3. Okay, thank you very much. Yeah, so later on, towards the end of the webinar, I will share about this workshop. So if you are interested, you can stay throughout the webinar. If not, halfway through, I will let you all know that I'm going to share about this workshop. And then if you already use up your SkillsFuture credit or you're not interested in the workshop, okay, feel free to exit the webinar. Okay, so with that, right, let me come back to the webinar proper. Okay, just a quick disclaimer, this is for information purposes only, and the views expressed by me are my own personal views and opinions, okay? And please be advised to make your own independent evaluation, all right? Okay, with that, let's kick things out with the webinar agenda today, right? So we're going to talk about the current macro situation. Okay, things are going haywire everywhere. Later on, we will touch about that and what is the impact that this situation has on the whole world, right? Not just Singapore, but the whole world. Okay, and then why quality investing stands out during these times of turmoil, right? So we are not focusing on a lot of stocks. We are just focusing on the quality stocks. Okay. And I'm going to just highlight a few quality stocks inside. We're going to go through a fun game inside. You can spot whether it is a quality stock. Okay. And then we will end off with the Q&A. If you have any questions, you can let me know. And the next step going forward, what you can do. All right. Okay, so this is gonna be a very quick session, just 1 hour. Okay, so if you have any questions, you can just type it inside the chat box. I will answer it towards the end of the webinar. Okay, for those who are not sure, how you get to know this webinar, you don't know me, okay, let me just share a bit about myself. All right, so I've been in the finance industry for over 10 years. So even before that, right, I was already investing. So back then, I didn't know what I was doing. I was just emotional trading. Then along the way, I joined Motley Fool Singapore, and then I pick up a lot of investment knowledge. Okay, and I'm happy to announce, right, or share that over the past 1 to 2 years, okay, I've been working hard to get my ACLP, which is the Skills Future accreditation. And then I also work with SGX Academy to become a so-called a pro speaker, and then also work with my partner, Unicorn, to launch this IBF course, which I will talk about it later on. Okay. And over the past few years, right, I've always started my own side hustle, smallcapasia.com. So this is a rather niche blog lah. So because I realized that a lot of these news portals, Business Times, Straits Times, or even a lot of investment blogs out there, they talk about blue chip stocks, REITs, but nobody really highlights the small cap stocks. So I started off as a side hustle. I just want to try it out, and then I've already, I think it's around 7 years in the making already. So this is becoming sort of like my main focus nowadays, because I really quit my day job. Okay, I am trying to do my own thing and also become a YouTuber. All right. So having sore throat, so recently a bit slow on the progress, but okay, I will pick up the pace, okay, in this YouTube channel going forward. Okay, once I recover from the illness that my kids pass on to me. Okay, so anyway, if you want to follow me on YouTube, okay, you can scan this QR code and you'll be redirected to this website, this channel called Invest Kaki. Okay, and inside, right, you will see a lot of videos. So a few of the interesting ones are like this Singapore stocks to celebrate National Day. I talk about ComfortDelGro trading at 15-year low. Is it a bargain? So when I touched on ComfortDelGro back then, it was trading at $1.10. But after that, I think last week I saw it was around 130 something. Yeah, so these are some of the ideas like you can get when you follow me on YouTube. Okay, so you just scan the QR code to follow me. If not, you can go to YouTube and search Invest Kaki. I think tomorrow I'm gonna do a video on DBS. Okay, so DBS just launched there's a new article, right, about how the MAS is gonna impose some restrictions on DBS. So I'm gonna talk about that tomorrow. Okay, hopefully. Okay, and so the other two videos, so I compare the local banks with the US banks, as well as I touch on the Lendlease REIT. Okay, so-called the best retail REIT lah. But I also cover other REITs along the way inside the YouTube channel. Okay. Sorry, I'm having sore throat, so along the way, let me clear my throat. Okay. So now onto our topic, right? So what's happening around the world? Okay. So you can see, right, recently there are a lot of geopolitical turmoil, or what I call that as war lah. All right, one in the Middle East where Israel is fighting the Hamas, okay, and the other one in Russia and Ukraine. So after 1 year already, they are still continuing. And if you see this, this is actually 30 October. So this is rather new news. So Russia, although is losing the ground war, they are deploying new suicide drones. So this conflict has already been 1 year, but it has not really come to a standstill or something like that. So in fact, it is still ongoing. It's just that whenever we read about news, right, they always talk about the new things, the new developments, which is this, right, the Middle East conflict. But not to forget, right, this Russia-Ukraine war is causing a lot of pain in the terms whereby there's high inflation due to the war. I mean the oil prices, the wheat and all that. Okay, so which lead me to this high inflation point. All right. Okay, if you look at this shelter, food, and energy are the major categories that make up our CPI, or Consumer Price Index, around the world. So shelter, when you talk about shelter, is house lah, and food lah, and energy to drive cars, to have electricity, to keep yourself warm, that kind of thing. So these three already account for 54% of the entire index. All right, and the ongoing war between Russia and Ukraine and the sanctions have put a lot of pressure on the oil prices. As a result, right, the energy prices are increasing, and also a lot of supply chain issues that all resulted in this high inflation. And I'm actually quite surprised when I've go do some research, right? We are among the top 5 countries that are concerned about inflation. Okay, so it seems like, okay, although our currency keep increasing, I mean, keep appreciating is a good thing when you are talking about traveling, right? It's also going to cause higher inflation, okay, especially in a small country like Singapore, and we are very dependent on the trade and the macroeconomic issues. Okay, so long story short, right? Right now, what we are looking at is abundance of cheap credit in the past, because what happens was that low interest rate from the US, okay, resulted in a lot of cheap credit. A lot of people just drive up the house prices because interest rate is only 0%, 1%, 2%. So what happened? A lot of people go to buy houses, buy stocks. As a result, all these asset prices went up. And food, okay, which the actual raw material is actually wheat coming from Ukraine and Russia, okay, and energy coming from Middle East as well as Russia. So they are all impacted somewhat, by the supply chain and the ongoing wars. So in a nutshell, right, the macroeconomic events do pose serious consequences for us as investors. So when it hits high inflation, and then what will happen? So it affects businesses and all that, and then it affects us investors. Okay, so when we talk about this run, right, we also need to talk about the high interest rate. Due to the high inflation in US itself, so the government is trying to clamp down on the high inflation rate in US. And that's why they are increasing the interest rate at a very fast clip. So if you can see this chart itself, this is grabbed as of October itself, okay, this month, I think this week itself. So you can see the federal funds, which is the interest rate, right? So from 2014 to 2015, they tried to increase it. And then because of COVID, what happened? They decreased it to near zero. And over the past 2 years, because of COVID is one determinant, but the other one is the election. So when you are elected as president, you wouldn't want to straight away increase interest rate, right? You want to keep it low, good for the consumers, good for businesses and all that. And what happened? Towards the end of 2022, right? So the interest rate just shot up all the way to around 5.3% already. And the interest rate has been increased more than 10 times. So 10 times since March 2022. So if I'm not wrong, maybe end of the year there will be another one, or they're gonna choose to keep it at least stable at 5.33% for the time being as it tries to control the high inflation. All right. Okay. And what is the impact to us? Okay, so first of all, let's talk about the economic cycle. To understand it a bit better, right? This is whereby when inflation increase, all right, the U.S. central bank will increase interest rate. And what is the next step? The next result is the contracting of the economy. So although we haven't seen any real recession, right? But it doesn't mean that the economy is not contracting. In fact, I believe it is contracting at a slow rate because right now, because of the boom in the past 2 years, I think it's still kind of balance out each other. All right. And this is the point where we are in right now. Okay. Because when you look at it, 19 October news, the US mortgage rates have hit 2-decade high, 20 years high of 8%. 8% is crazy. When interest rates increase from 1+% to 3+%, Singaporeans are already screaming, right? A lot of us are already saying, wow, the installment payments are going up. Like if you are out of a job, right, you have problems, paying up the installments. So this is 8%, okay, in the US itself. So this is causing a lot of worries, okay, in the US itself. So Americans, they are facing problems. Either you want to buy a new house, you face this 8% rate, you won't be able to buy. So the next possibility is that the economy will start to contract because of this high interest rates environment. Okay. And on the local context, right, you can see that our listed companies are also feeling the heat, okay, from rising interest rates. This is a recent article. You can go and check it out. All right. Higher finance costs are weighing on the net profits. Even among the the blue chip stocks, right? The non-bank counters, because we know banks, they earn from the interest rate spread. So they get the money from the deposit, like maybe they give you 2%, but they charge the housing loan like maybe 4%, then they earn 2% spread, right? So they are the winners in this case. But for the non-bank counters, they are facing an increase in the finance costs and the interest expenses. So this will affect, the how businesses will operate in the near term. Okay, because higher cost of doing business means they will have lower earnings over time. And what happens to lower earnings? They will hire less people, they will have retrenchment because of the poor outlook. And then this will also have an impact on stock values, because when we're thinking of doing, forecast, growth forecast of stock intrinsic value, like using the discounted cash flow model, right? Higher interest rates will be resulting in higher discount rates. So the intrinsic value will become much lower. Okay. And this is especially a problem for firms with huge debt and not making profits. So one example is Sea Limited lah. Okay. The other example for like huge debt, right now I can't think of a lot of companies with huge debt. Those that have huge debt have already gone into bankruptcy, like Hyflux lah, Noble Group and all that. Okay, this only comes to my mind now. Okay, but on top of that, okay, so like I said, right, on the flip side, the banks and the insurance are the ones that benefit because they earn from the spread. Like Bank of America and US, Great Eastern, and more. Okay, so okay, let me take a sip of water. So how quality investing can help you, right? Or really stands out in the sense, right? Okay, let me go through the notion or concept of quality investing first. Okay, so for many years, people always hear of either value investing or growth investing. Okay, but these days, quality investing has taken a form of itself. All right. So the approach, right, aims to identify and invest in high quality companies that tend to perform well in all market conditions. So you see, I bold here, all market conditions with lesser volatility. So later on, I will share why. Okay, and this is actually closely related with factor investing. Factor investing is that, according to many studies, right, they find the alpha factors, okay, that lead to outperformance of the index. That means, like, for example, they see that, okay, they find value stocks. Okay, so this particular factor, right, like maybe they are cheap, right, and they are small size, they will outperform the market in the long run. So this is what we call factor investing. So there are a lot of different factors, but quality factor itself stands out because it has the ability to perform relatively stable, okay, and over the long run. Okay, let me share why. Okay. So according to this research done by this Lazard, Lazard is a fund, they invest in quality stocks. Okay, this Lazard and the MSCI. So you can see that quality has outperformed the global index, growth and value index. So this blue color line, okay, has outperformed value, growth, and the index itself. And this is across from 2000 to year 2000 to year 2021. So this is a research spanning across 21 years. All right. And in fact, right, same study, they found that the quality index actually outperform with a lower volatility. So you can see that the annualized volatility is around maybe 14.2%. That means every year, right, the stocks inside this index or the index itself will fluctuate by 14.2%. Okay, this is much lesser when you compare to value, growth, and the index itself. All right. So this is at a so-called lower risk as compared to the other indices. So higher returns with lower risk, very good, right? So you can also see how the quality index actually beats the normal index by 50%. All right, 50% from September 2008 to September 2023, just last month. This one is just 1 month plus ago. Okay, and you can also check out, you compare the every single year how the index, both the index has performed. So although there are some years is around the same or they underperform, but in the long run, right, you can see like, oh, they have a positive year even though the index went down. They outperform much higher when it's compared to the index. Okay, and for a quick context, right, for those who want to know what ACWI index stands for, this is a stock index designed to track the broad global equity market performance. So this is managed by Morgan Stanley, right? And the index comprises of nearly 3,000 companies from 23 developed countries Sorry for my bad handwriting. And 25 emerging markets. Okay, so they have 3,000 companies inside this index itself. All right, so the quality index actually picks the best out of the breed. All right, and they are managing to they manage to outperform by 50% over the long run. So you can see how it has it so-called reinforced the notion that you can actually have higher returns with lesser risk. Okay. Okay. Okay, so the question next is, how do you spot quality? I believe now I got you interested, right? So if you want to spot quality stocks, how do you spot? So anyone wants to make a guess first? How do you spot quality stocks? Because it's a rather subjective thing. Okay, you just type it inside the chat box. What do you think pertains to quality stocks? Whether is it a brand or very strong earnings? What do you think is the hallmark of quality stocks? Just type it inside the chat box and you know, share with us. So Valerie says there is a moat. Okay, anyone else? Maybe you are all having dinner, so I don't disturb you all. Okay, Daniel, thank you. Sharing earnings and assets. All right. Okay, so both of you are right to a certain extent. Okay, so although appraising the quality of a business can be rather subjective, okay, it can be based on two types of criteria. One is soft, one is hard. Okay, so best practices suggest that they should be able to demonstrate at least good management. So this is the soft criteria. So when we talk about good management, right? So the management team must be able to like capitalize on opportunities, have lower turnover. They must be have the relevant experience and vested in the company itself, especially at a senior level. Okay. The next one, yes, Valerie got it correct, is economic mode. So what we want to do is to find companies, all right, that enable them to reinvest back the earnings over a long period of time. So when you have this economic mode, right, you can continually so-called you fend off competition so that you can maintain your profit margin and then reinvest back your profits to so-called continually manage your mode. Okay, so the other three are the hard criteria. The hard criteria means the numbers. Okay, so the first two are more of like based on what you feel of the like the management team, whether they have a mode or not. Okay, the other three criteria that I want to share is the hard financial numbers. Okay, so and this is according to the the ACWI quality fact sheet. So they look at three main fundamental variables. One is strong balance sheet. Okay, strong balance sheet means they should have a strong financial position to withstand the market condition and also lower debt levels. Okay, so when we look at balance sheet, most of the time we look at total debt to equity, net debt to equity, interest coverage ratio. Okay, and the other one is stable earnings growth. Okay, so we don't want fluctuating earnings growth. We want them to be able to grow their earnings like maybe 10% a year every single year. We don't want them to be like maybe ExxonMobil. When the cycle is good, okay, they will earn a lot. When the cycle is bad, the oil prices go down, then they're making losses or close to 0% profit, that kind of thing. And the last part is reinvesting profits, which I want to share is actually, if you look at this one, right, they actually talk about high ROE. So they keep it simple for us, okay? Even the quality index, they keep it simple. They just look for ROE. So we will just use ROE for the how to determine, okay, quality stocks. Although there are other numbers you can use, like you can use things like ROIC, okay? You can say things like ROA. So there are a lot of things that you can use, but high ROE, I mean the ROE itself is the easiest to find when you look at a lot of stock analysis platforms. Okay. Okay, so now let us play a game. All right. We will go through the 5 criteria of quality investing for each stock. So we have 3 case studies, and you let me know whether you think it is a quality stock or not. Okay, so are you ready? Okay, so first stop, Microsoft Corporation. Okay, is Microsoft a quality stock? Okay, can type it inside the chat box. Do you think that it is a quality stock? Okay, so thanks for the responses, right? Andre, Valerie, okay, Yi Kang, Zach, all say yes. All right. Okay, give me a second. Okay, why is it? Okay. So based on the 5 criteria that I showed you just now, okay, I managed to do all these findings and I will share with you here, all right? So actually I done these slides, I updated the numbers just yesterday, all right? So when first thing we look at good management, right? You can check out the CEO profile like in LinkedIn or just Google itself, okay? The CEO worked his way up from engineer, okay, mere engineer, to becoming the CEO. And the most important thing is he led the cloud division. So he focused on changing Microsoft Office from a downloadable thing to becoming Microsoft Office 365. And as a result, right, this subscription model is where all the businesses now use. So actually, as a matter of fact, right, so if you are working, right, you tend to have this Microsoft Office 365. And how it works is for every user, okay, maybe you need to pay around $10. Back then, when I was doing it for the first time, so my ex-company actually migrated to 365. So each user has to pay $8, and that was a discounted price. Then later on, I think they increased the price every single year. But can you say no? You can't really say no, right, to the price increase unless you don't want this product. So it in itself, Microsoft Office 365 is an economic mode already. On top of the branding, and all that, you have even the teams that can fight Zoom and can fight Google Meet and all that. Okay, and when you look at the numbers paint a very, very pretty picture. Okay, so one of it is that it's actually a net cash company. So although they do borrow and they have like 4 billion in debt, but they have more cash than their debt itself. And their earnings growth over the past 5 years is at 18.5%. It's already a $1 trillion company and is able to grow at 18.5%. So this speaks something, right? That they are really a quality stock that can continue to keep piercing through the higher zone, the horizon. And on top of that, what makes me most excited about Microsoft is actually the high ROE. They have over 30% ROE in the past few years. Okay, and okay, you can see the revenue and earnings are just increased over the years. So very, very stable growth. And if you have invested in Microsoft Corporation, okay, so this is what happens. Okay, year 2019 is around 90 something dollars, and as of yesterday, $337. So 100 to 300 is 3 times return. Investing in a stock that I believe everyone have heard of, right? So this is a 3 times return already. Okay, so you don't talk about you want 100% return in a single year lah. So if you look over the long run, right? So this consistent share price growth is the one that you know, as quality investors, right, we want to have. Okay. Okay, so now for a rather controversial stock, Tesla. Okay, can you type it inside the chat box? Do you think that this is a quality stock? Okay, is Tesla a quality stock? Yes or no? Just type it inside the chat box. Okay, no right or wrong lah. It's just based on your own opinion. Okay, thank you for your answers again. Right, so Daniel say no, Henry and Noel say yes. Okay, and Zach say no. Okay, so I don't want to use my own opinion, so I will use the 5 criteria that we go through just now again. All right. So here it goes. All right, so let me go through one by one of the criteria. Okay, so first one, good management. All right, and I believe all of us know Elon Musk. All right, the world's richest man, and he has around a 13% stake in Tesla. And I believe the most significant thing that he's able to do is not, you know, run this company using AI or using robotics, the kind of thing, is that he managed to save all these marketing costs simply by using Twitter as a marketing platform. Okay, so I actually managed to grab this screenshot lah. Back then, someone complained about the supercharger always full of idiots, and and Elon Musk actually replied, and this itself, right, has 2,200 likes. So this is how, you know, even though when we talk about marketing, a lot of us think about, wow, you need to do a lot of campaigns, like for example, Coca-Cola do a lot of when you drink Coke, you feel happy, TV ads, social media campaigns. But Elon Musk is himself only, and he saved a ton of marketing costs. If you go back in time, you go and read some articles, you would agree with me that he's one of the brilliant tactics that he used is to use Twitter, or now it's called X lah, to save on a lot of marketing costs, especially when Tesla is back then still loss making and building up their, you know, their factories and all that. Okay, next one is economic mode. Of course, no need to say, Tesla has exceptional branding. Even personally for me, if I were to have a dream car, I want to buy Tesla. Maybe one of it is to save the earth, the other one is to have just the T logo lah. Okay, and so other than that, right, so you have, for the recent news, right, you can see that all these ongoing what you call that, it's not riot, what is the union, yeah, the union affecting the other car companies, right? It actually doesn't affect Tesla, because they are utilizing a lot of robotics to lower the production cost. And in fact, right, okay, I think this is also rather controversial, because when investors talk about Tesla, the reducing the cost of their Tesla cars because they are slashing the sale prices now, the retail prices. The bull camp will say that, okay, the bear camp will say that, oh, they have lost their mode lah, they price the car lower because of competition and all that. But the other side, right, on the other side, the bulls camp will say that Tesla is able to do that because they have much lower production costs compared to the other car companies. When talk about GM, talk about Ford, and all that. So because they're able to lower the cost, they lower their retail prices of their cars to take the fight to the other competitors, right? So this can be regarded as a mode itself lah. Okay. And let's go for the numbers. Okay. So these three. So right now, Tesla is a net cash company. Okay. And they have, okay. I think I missed out one. Yeah. Okay, so this one actually pertain to this. So I actually also managed to find this, that the top selling EVs in the first half of 2023 is still belonging to Tesla. So first two models, they are the champion already. You look at the other EV models. So although there are a lot of talk in the market that, oh, they want to compete with Tesla, build more high-end EVs, but ultimately when you look at the volume, the sales volume, and the real statistics, right, Tesla is still winning out. Okay. Okay, so when we look at the earnings, okay, 5-year CAGR is at a 35% growth, and ROE. So actually, even okay, so before I actually did this research, I was thinking that Tesla ROE would be much lower, but in fact not. In fact, it's anything above 10 to 15% can be considered quite good, and they are already at close to 20%. So this actually is also as a result of the lower production cost lah, because when you use robots to make cars, when you build up the volume, right, you will be able to increase your ROE over time. Okay, so so with that, right, with all these findings that I have, I believe Tesla can be considered a quality stock lah, right? So this is just based on my findings. Okay, this is also subjective because quality investing is subjective, right? Okay. Then again, okay, when you look at the stock price, right, you can see how it has actually shot up, okay, and then decline, okay. So the question here is, why do you think that the share price declined since 2022? Okay, anyone wants to share your thoughts? Why do you think that the share price of Tesla, okay, actually dropped from, I think, quite high lah, I think 409, okay, to around 100 plus before rebounding to 197. Anyone wants to make a guess? Okay, nobody. Okay, so in fact, right, if you were to ask me, I believe that the share price declined due to one reason: valuation. Okay, so for any companies, okay, for any quality company, if you buy at a very, very expensive valuation, although your earnings will grow, okay, when your earnings grow, it can only go up to a certain level. Like let's say your earnings is not growing as fast as your share price, then there comes a time whereby the stock price will take a bidding. Okay, so to align back to the share price and the earnings growth together. This is whereby Warren Buffett always say the share price will converge with the earnings growth. All right. So if you have one takeaway from this Tesla chart is that, okay, the stock price will converge with the earnings growth over the long run. Okay. All right. Now on to our third stock. All right. Let me share with you. So first two, we talk about US companies. Now let's talk about our local stock that everyone would have heard of. And the question is, do you think that Singtel is a quality stock? Can you type it in the chat box? If you think Singtel is a quality stock, can you type yes? If not, can you type no? Okay, Singtel, the biggest telecom company in Singapore. Okay, so a lot of people say yes. Okay, Henry say no. Okay, so a mix of responses. So again, let me go through it using the 5 criteria. So you can see how, different people perceive different stocks differently. So some think that, oh, this stock is worth to invest, but others may not. Others may think of different angles on whether this is a so-called good candidate for investment, right? So you should always have a checklist. Okay, this is just out of the context. So when you comes to investing in stocks, right, it's best to have a checklist. And okay, just to jump the gun, right? So later on during the workshop, we will talk about the course itself and how we have a checklist to actually run through this whole thing. Okay. And without further ado, let me come back to the slide. Okay, Singtel. All right. So first one, good management. Okay, when we talk about management, I find it hard to say that it's a good management because why? The new CEO actually just joined in 2021, and as of 2023, okay, there's still a shuffling of the leadership. So while we can say that the current new management team is capable and all that, but I would say that it's untested So you just throw them into the water. You don't know whether they can swim well or not. So you need at least a few more years to see. Okay, although they do have a relevant experience behind their belt under their belt. All right. So I would say that this is a mix. Okay. And number two, mode. Okay. If you were to look at Singtel 10 years ago, yes, I would agree with you that Singtel has a mode. They are able to charge very high prices for their the mobile plans, the broadband plans. Why? Because they have the biggest market share. However, if you look at Singtel today, right, they are really disrupted by digitalization. Okay, so this disruption is real. Okay, this happens over the course of a company's lifespan. All right, I can't find a good term to say, but so companies evolve. Okay, be it like like last time, everyone use communication by handphone, you call and all that. Nowadays with smartphone, you can just go social media. You don't even need to tell your family what you're doing. They can receive notification from Telegram itself. I mean, not Telegram, Telegram and IG Instagram. So all these are disruptions, and this happens to all companies. And a real company with a moat, right, is able to still stay ahead of the competitors. But unfortunately, when you look at all these mobile plans, broadband plans, their prices are taking a beating. All right. So now they are really like on par with the rest, M1, StarHub, and all that. So I would say that the moat for Singtel has so-called dissipated okay, over the long run. Okay. Balance sheet. Okay, balance sheet wise, Singtel is still manageable. They have taken on more debt in the past 2 years because they are trying to grow their fixed asset business, the what you call that, the data centers. Okay, you can go and check. They want to position themselves as a premier data center operator. Why? Because they know when you look at just consumers, right? Consumers will always go for the cheapest plan. So they have to go by the enterprise route to get the higher profit growth in future. And enterprise need what? Need data. And as a result, Singtel is going to the data center route. Okay, but this need a lot of money to build. And so you can see that Singtel is going to spend a lot of money building up the data centers. And this needs to be kept in check. So you need to monitor it closely and see whether they can still pay out dividends or maybe at least sustain the dividends in the near future. Okay, but this is the one that really so-called pull it down out of the quality stock because you can see that for their earnings growth, right, it is stagnant. Okay, it shot up in year 2018 because I think they spin out the Netlink Trust, okay, and they recorded it as a profit, Netlink Trust. And subsequently, what happened is just downhill, okay, for their earnings. So we will still need time to see whether the new CEO can make things work again. But for the time being, right, the earnings is actually going down. And last but not least is the ROE. So ROE right now is standing at 8%. It used to be more than 15% if you were to look back at the financials of Singtel, right? You can just do some historical search. All right, it used to be 13-14% or even 20% back then, like 10 years ago, and now it has dropped to only 8%. So if you were to sum everything up, okay, I would say that Singtel is not a quality stock, right? So this is also supported by the share price movement, all right? So self-explanatory. COVID period, okay, pre-COVID, okay, sustain, stable, after that come down, then all the way stagnant already. So this is the share price tells a picture in the long run about how this is disrupted by digitalization. Okay, so we are coming to the end of the quality the quality investing slides. Okay, so now what I want to share is about the SkillsFuture credit deductible and the IBF accredited course, okay, called Intelligent Investing in the Era of Disruption. So let me before I go to the nitty-gritty details, right, let me just share a few slides on what you would expect inside. Okay, so one of it is the content. Okay, so we will talk about like the business dynamics. So when we what dynamics we look at the trends of the industry, we look at the economic mode of a company. Okay, and then later on we talk about how you can project growth. All right, then we talk about financial ratios that you need to know. Okay, so today I only talk about what ROE and say net debt to equity, right? Net debt to equity. So there are a lot more ratios actually that every investor need to know, and I will be able to share more during the workshop itself. Okay, of course, we need to talk about valuation as well. So inside the workshop, we will talk about valuation. And then last but not least, we have the presentation that all of us, you will use the concepts throughout the 3-day workshop to do a presentation and then share with the group. So this will be a very fun project lah. So you can really learn and implement, and you actually, we as human beings, right, we learn the most when we do it. So for this presentation, when you actually take the steps to do the presentation along the way, you will actually pick up all the investing concepts, and then after you graduate from this workshop, you will be able to conduct your own stock analysis process. Okay, so let me just go through some of the slides. All right. Okay, so one of it that we talk about is the effect of disruption. Okay, how has disruption affect the companies as well as the share prices? Okay, so one of the example that we share inside the workshop is Tesla versus Volkswagen. Okay, so Tesla EV, right? EV, robotics, AI. You can see why everyone likes the very sleek look of Tesla, and it actually went up 1,100%. Okay, since 2019. So not very long, right? Just 4+ years, you will be able to gain 10 times of your return. So if you invest 100,000, you'll be $1 million. I mean, you'll be a millionaire already. Okay, just saying. Okay, versus negative 20% for Volkswagen. All right. And on top of that, okay, we understand that a lot of us now use AI tools. And we will show you how you can use these AI tools. Other than the very popular ChatGPT, we will also talk about FinChat and AlphaSpread to help you enhance your stock research. Okay, so we will give you some prompts along the way to help you better understand the industry behind, what are the things to look out for, and this will be used for valuation, this will be used for the industry and all that. So this is actually very useful for US stocks. Okay. Okay, next we will also give a lot of examples inside the workshop, and one of the examples that we give in the cloud computing is this. Okay, Google Cloud versus Amazon versus Microsoft Azure, right? Anyway, so you understand lah. I believe a lot of us already know that these three are the key companies in cloud computing, and they actually combine, right? They have over 60% of the market share of the cloud computing industry, and this industry is so big and continuing to grow, at least in the foreseeable future, right? Other examples, like we will talk about this, how to read the financial statements, what to look out for, the revenue, the operating margin, net profit margin, all right? And also like the financial position, how to calculate current ratio, right? Using current assets divided by current liabilities and all that. So these are just some of the examples that you will see inside the 3-day workshop. Okay, so now let me share with you this course brochure. Let me just unshare my screen and share with you the actual link. Okay, just give me 1 second. Okay. Share my screen. Okay, so this is the course brochure. Okay, if you are interested, right, you can actually let me know. I will maybe share. Okay, or maybe I just share inside the group chat now. Let me see how I can share it. Okay, just give me 1 second. let me share this with you, this brochure with you. Where is it? Where is it? Okay, I've shared the course brochure in the chat group itself. Okay, if you're interested, you can go and take a look. So maybe just let me run through it very quickly. Okay, so this is Skills Future credit eligible. All right, so you will have the up to 70% funding from the government, and then after that you can use your Skills Future credit to deduct the balance. Right, so this is also accredited by the Institute of Banking and Finance. And so what are some of the learning highlights? Okay, so like what I share, we will leverage on AI tools to help you to build your portfolio. We teach you the fundamentals of investing, a revenue model, how to pick the right companies by understanding the economic mode, the growth drivers, and all that. Okay, so last but not least, we have the financial ratios on, and we're going to run through many of them, all right, inside a checklist to help you identify the highest performing quality companies. Okay, so this is a face-to-face class. It's a 3-day weekend. Okay, so we are running it on 25th November, 2nd December, and 9th December. So across 3 Saturdays. So the total duration will be 24 hours. It's from 9 to 6, and in between we have 1 hour break. Okay. So the course outline again, same as the highlights. So let me run through a few things here. Okay, so we will talk about how businesses generate revenue. Okay, the types of cash flow analysis, growth analysis, financial analysis, and how to compute the valuation. Okay. So this is three full days, 9 to 6 on Saturdays. Okay. So if you are interested to join, it's 25th November, 2nd December, and 9 December. Okay. So right now, later on, I will share with you a link and a QR code. Okay. So let me just go through this brochure first. Okay. So this is me. All right. So you can just read if you want. Okay. We don't really have a lot of prerequisite. So basically, you just need to have basic English skills, which if you have gone through the webinar with me here, I believe you will have this, and you will have your own laptop unless you are using your mobile phone. Okay. And on top of that, I believe you will have some form of investing knowledge, although no prior knowledge is required. Okay, so our training provider is Unicorn, so I partner them to come up with this course and share with you all. Right? Okay, so now onto the course fees. So the full course fees, $1,005 and $12 after GST. If you are above 40, after the government subsidy, it will be 532, and then you can use the Skills Future credit to offset this 532. Same thing goes for the 21 to 39 bracket and the PRs. So after subsidy is 812, you can use your 1,000 Skills Future credit, assuming you haven't used any. All right, you have 1,000 sitting in your account. You can use it to offset this $812. Okay, so let me go back to the slides again. Okay. Okay, so to recap, right? Okay, let y'all know the full course fee is $1,005, $12. Okay, for Singaporeans age 40 and above is 532 after the government subsidy, and you can use your Skills Future credit to offset to $0. Okay, And if you are age 21 to 39 or a PR, you will have 50% government subsidy. So you will come down to $812, and you can use the SkillsFuture credit to offset $812. So you pay nothing in cash lah. If you assuming you have the you have enough SkillsFuture credit. All right. Okay, so I've come to the end of the webinar. If you are interested to register your interest, so you are not making any payment now. If you are interested to learn more, okay, or maybe if the dates are not suitable for you, you want to be in the know first, all right, you can register your interest here, scan this QR code, or you can visit this link. So I will paste it in the, sorry. Okay, so I will paste it in the chat itself. Okay, so once again, thank you everyone for joining today, this webinar. I hope that you have learned something, be it the quality stocks criteria or the SkillsFuture, this IBF course. If you're interested, you can scan this QR code or visit the link that I shared in the chat box. All right. Okay, thank you everyone. Anyone has any questions pertaining to this workshop? Whether you have SkillsFuture balance or anything. So this link, right, will direct you to a Google form. Okay. Then sorry, I'm pasting the picture. Sorry. Okay, if you go and click on the link, it will direct you to the Google form. So you just need to register your interest there, right? So this is how it will look like. Okay, so this is the Google form and how it will look like, right? You can find out more about the course outline via this link as well. So right now we are gathering interest. We already have a few slots that are signed up, so they are filling up very fast. If you want, you can just enter your particulars, your email, full name, number. Sorry, I have additional email address again. Okay, and the course date you'll be attending. So we are only running this workshop for November to December, and this is the last one that we are running for this year itself. Okay, if you are interested for the January to February one, or maybe even later on, you can just select the option here lah. Okay, the venue will be decided upon confirmation of a class. That means when we hit more than a certain number, we will liaise with our training partner to set up a venue, and then we will let you know again. So we have, I think we have the training rooms around Singapore lah, but I'm not sure where are they located yet. But you will be located in heartland areas, so not to worry. Okay. And if you want to check your SkillsFuture credit balance, right, you can actually log into this portal here. Okay, just click in, log in with your SingPass and find out the credit that you have. Okay. So if you have any questions, you can either let me know now via the chat box, or you can also WhatsApp my partner, my friend, right, Henry, at this number. Okay. Don't spam call him. Just WhatsApp him that you are interested in this workshop. You want to find out more. All right. Okay. So we have come to the end of the webinar. All right. Just exceed 1 hour by a bit. Anyone has any questions? Okay. Anyone? I'll just stay on the line for a while more. Anyone has any question regarding this workshop registration? Hey, thanks, SM. Thank you. I'll just stay here for another 5 minutes in case you have any questions. If not, if you don't have any questions, please you feel free to leave the webinar. And thank you once again for coming down. Okay, in during a weekday evening. Thank you. Thank you. Thank you, everyone.